What's up, YouTube fam? Happy holidays. We are just a few days away from Christmas. Wanted to do a special, YouTube video for you guys. I hope y'all all blessed. As always, like, share, comment, and subscribe below. All right. Share this with a friend, tell a friend, tell a friend, tell a friend. All right. Today, I'm going to be going over a couple things that's been happening in the market, especially the crypto market, and pretty much going over one of my favorite indicators, the MACD indicator, and how you can use it in conjunction with price action. I always get asked, what are the things that I use for confirmation before jumping into a trade? And I don't really use a lot of things. The MACD is my main indicator that's been on my screen for years. And I might add Fibonacci. So Fibonacci along with the MACD, Confluence, and then that's pretty much it. I'm going to talk a little bit also about risk management because somebody on my last video asked if I can go over risk management and how I just put together this entire strategy. Of course, guys, if you want access to the Wall Street community, the Telegram link is in the description box below. And then, of course, if you want access to the team community and, just share ideas and just be a part of like-minded individuals, right? 2025 is pretty much in 2 weeks. And, I know a lot of you guys, you got goals. You're trying to take your trading game to the next level. One thing that's going to really help being surrounded by other motivated traders who pretty much have essentially similar goals like you, and they're just trying to get better. You want to be around that, all right? Environment is everything. Ladies and gentlemen, I'm going to say this again. Environment is everything. All right. Environment, teamwork. It's so crazy how many people overlook a lot of that. Think about it. When you were in school and you did team projects, right? If you have the smartest kid on your team and you got to learn from them, watch them, and guess what? Because they want to get an A on the project, you by default are going to get an A, right? That's why I love school projects. I always loved them. I never understood why people hated them because guess what? When you're partnered up with the right motivated people, they're going to elevate your game by default. And the same thing holds true in real life. All right. The reason why I've been able to have massive success is I align myself with the right people by being in the right environment. So if you want to be a good, successful trader, you want to up your level of skill set, don't just join the free Wall Street community. Hit me up. All right, hit me up and say, "Hey, Steve, I want access to the private." And guys, I'm not. You guys, the ones who are part of the community, you can say it in the comments below. I'm not charging nothing. There is no monthly fee. There is no, percentage of your profits. I'm not gonna put you in no freaking meme coin or any Ponzi scheme. None of that. All right. None of that. So hit me up, shoot me an email, or hit me up on Instagram, Facebook, or wherever you can find me. All right. So let's get to it. I don't want these videos to be too long because I know people's attention span is pretty much non-existent these days. So let's keep this short, simple, and efficient. All right. So when I'm looking at the market, first and foremost, this is the MACD indicator right here. Let me just bring that up. Boom. Want to go to indicators, type in MACD. All right, the one that I specifically use, MACD 4C. All right, MACD 4C by VKNO422. All right, that's the one that I use. And pretty much they all work the same. All right, let me bring that back up. They're all the same, guys. People think like it's just a matter of preference. So let's say I pick this one and then this crossover one. It's all a matter of preference. It's a MACD crossover, it's a MACD 4C. It's just a matter of preference. For the reason why I choose this one, particularly, it's just preference. All right. And the whole point of the MACD, it stands for moving average, convergence, divergence. All right. And measures the momentum of the market. So when it's green, obviously bullish. When it's red, bearish. Okay. And also you can use it to identify divergence, right? Hence divergence in the name. And what I really like to use it for is to understand my trends, obviously know when shift and momentum is moving, right? And most importantly, I do this little trick. I don't really see anybody else really do this online or anywhere, but every time it goes bearish or bullish, I like to measure and see if I'm either in an uptrend or downtrend. So notice how right over here, it was bullish. Then it went bearish. Then it went this bullish wave right over here, right? It's higher than the previous. And then this bullish wave is higher. That's how I know I'm in an uptrend, because think about it. Every time this goes bullish, a higher high should be created. Every time this goes bearish, a lower low should be created. So notice when this went bullish, it did not create a new higher high, right? So it was going bullish. And then what happened? All right, if you've been watching my videos, we got a close below. You had a bearish candle and then a bearish close below right here. So close below there. And once that happened, this happened on the daily, all you got to do is these wicks, these pullbacks here, that's your retest on the smaller time frame. So I'm at a daily retest, right, for gold. So I just go down to either the 4-hour or the 1-hour, and I just catch the retest. I just catch these pullbacks, right? Now, the only thing when it comes to the indicator or any indicator, I always tell people, okay, what's the number one thing about indicators? They lag. So notice how you're not going to see, like if I was on the 1-hour time frame, you're not going to see retest. Like if anything, you're just now getting a 1-hour retest. That's going to go into next week. So I already know the likelihood of this bullish momentum that's happening on the MACD is not going to supersede this previous high. So somewhere around here at one of these POI levels, point of interest levels, price is going to sell off. So these are the levels that I want to watch to sell. All right, makes sense? So basically, when price gets there, right, gets into this POI level, what am I watching for? I'm watching for that price action. I'm waiting for basically a bearish candlestick to close below a bullish. That's going to be my signal, all right? And then I'm going to enter the trade, place my stop loss above, and then boom, right? To give you an example, like right over here, I think I saw it on the 4-hour. Yep. See what price did here on the 4-hour? See how it kept tapping? Every time it kept going bearish, kept going bearish. Look at the MACD. Put it in conjunction, right? Price was not creating a new low. So that's how you would have known, hey, let me buy this. Because price is not, it's not closing below these areas. It's just, it's wicking off of it. It's wicking off of it. So basically on, a couple weeks ago, Friday, all you had to do was wait for a bullish close, which you had right here. And again, see these wicks pulling back? That's a retest on a smaller time frame. So if I go down to like the 10-minute, 5-minute, all right, let's swing back. There you go. When you think about it, you got your change of character. Right? You got your break, and then there's your retest. And notice how it's in conjunction, right, with your indicator, with your MACD. It's not breaking this previous low. All right. So my entry would have been around here, basically waiting again for a bullish close above a bearish. So basically, when I'm looking to buy, when this is going bearish, right? When it's going bearish here, when it's going bearish here, I want to see a bullish close above a bearish candle. That's going to be my indication. And then I buy, right? You see that right here. See all these retests? So the moment a bullish candle closed above this bearish, right? I get in on the next candle, my stop loss is below there, and then boom, same thing over here. See how this bearish wave, see how it came down? So these bearish so I need one of these bullish candles to close above, because I'm in a bearish, technically I'm in a downtrend right now. This is coming down. I want to see a bullish candle close above one of these bearish candles. which happens, right? You basically get it right around here. Boom. This candle closes above it. Perfect. I get in on the next candle. Even though this candle pulled back, no problem. I instantly get in here. My stop loss down here. If you have the capital, if you can, risk a little bit more, place it a little bit lower. And as you can see, there's your move to the upside, right? And then it pulls back again and again in alignment with the MACD. See how you can put everything together? And then also how I was saying how you can use, if you want extra confirmation, the Fibonacci tool. And the same thing, when I use the Fibonacci tool, I like to measure per leg, depending on the time frame. So I happen to be on this 10-minute time frame. So I'm going to measure this bullish leg right here, right? Because since we're going higher high. So from right here, and then you can use the MACD to help you. If this is the retest, where was the last bearish wave? Over here. So I'm going to start here and I'm going to measure this leg. And then look at that. So now I have multiple confluence. I got price pulling back to the 50 FIP. I got my MACD indicator in alignment, right? In conjunction with everything. So now my last bit. See, during this bearish momentum, notice all these bearish candlesticks. This bullish did not close. I need a bullish candle to close above this bearish. And then, boom, voila, right over here. Let it close. Perfect. Get in on the next candle. Perfect. Stop loss below. Perfect. And there's your move to the upside. Right? And every time it goes bullish or bearish, it should be creating a new high or low. All right. Always be on the lookout for that. All right, guys. Always be on the lookout for that. Are we creating new highs, new lows? So like right here, we didn't create a new high when this went bullish on the MACD. Right? All right. Let's see. We don't know yet. It goes bearish. But when it went bearish, it still didn't break this low. So I'm back to buying again. All right. So you'll always know even when to get out. So if I'm getting new highs, just like right here, after this new high was created, perfect, I'm still buying. As long as I'm getting new highs, I'm still buying. As long as I'm getting new lows, I'm selling, right? When this went bearish, perfect. Then this bearish wave, perfect. Then this bearish wave, right? So every bearish wave should be creating a new low. Every bullish wave should be creating a new high. And when it doesn't happen, that lets you know, hey, should I potentially get out of this trade? Right? So that's how I put this all together, guys. Real simple, real easy. Now, like I said, I got asked this question on my last video, Steve, risk management. So the market is closed right now. Obviously, it's Saturday, but this is what I always tell people. Listen, the key to you becoming really successful when it comes to this trading is understanding your risk management. Everybody all over the internet, all a part of these trading companies and whatnot, a part of these different groups. Ladies and gentlemen, it doesn't matter about the strategy. It really doesn't. Because as you guys know, you can go watch a million videos and watch a million different strategies. If your risk management is not up to par, you will not be a successful trader. The difference between the one that can consistently profit and the one that doesn't is the risk management. I've seen traders who are not very good analyzing the market, especially on a technical standpoint. They're probably 50, 60%. And I've seen phenomenal traders. They can literally tell you to the pip, market is going up, it's going down, boom, boom, boom. But guess what? The guy who's not great at calling signals and is 50-50 when it comes to taking trades, he's phenomenal. He or she is phenomenal when it comes to risk management. And then the person that gets all the directions right, has a 90% win strategy, right? How many guys watch YouTube videos now and then an ad pops up? This trader talking about they got that strategy, that community, got this and this and this and this and this. All right, if you're 90%, what you running ads for? If you're 90%, what you talking to us for? You should be a multi-millionaire, billionaire. Huh? Makes you wonder. If you're that good at your craft, what are you doing? Right? Something is missing. And I'll tell you, it's the risk management part. So get a Forex calculator. And literally, again, I'm going to keep this simple, just using the same example. So let's say gold, right? I got gold. Got this buy up here, right? I'm looking to catch this buy. I realize, you know what? Price is not creating new lows. It's coming right back. All right, cool. I get my change of character. I get my retest. Boom. So I go to my Forex calculator, guys. All right, position calculator. I look for, let me type this in, gold. Perfect. You can pick the currency, right? Obviously, for most of us, US dollar. Whatever your account size is, $1,000, $2,000. I'll say, most traders, they don't have more than $2,000 in their account. And then percentage. This is key. What are you willing to risk? Right? What are you willing to risk? Are you willing to risk 1%, 2%, 3%, 4%, 5%? Right? I always tell people, no more than 5% of your account per trade. Unless you're really confident, you really know what you're doing and you want to go all in, cool. But as a beginner, for most traders, no more. That's why you'll hear to a lot of traders, they'll say no more than 1 to 3%. I say 1 to 5% per trade on account. So what does that look like? So if I got $2,000 and I'm risking, let's say 5%, and then my stop loss, what's my stop loss going to be on gold? My stop loss is down here, right? I want no more than 30, 40 pips. All right, cool. Let's say I put 30. Okay. If I calculate this, it's going to tell me how much I'm risking, right? The lot size I need to be putting and using, right? Because I got a 30 pip stop loss on this. Remember, I got $2,000. I'm risking 5%. My stop loss is about 30. And then I want to trade a lot size. I'm trading the lowest lot size here. All right. Now, again, all of this is predetermined on how much you want to risk. And if you suck with percentage, swap it for money. All right. If you're okay losing, you know what? I want to risk a little bit more. I'm okay risking $300. Right? $300 with a lot size of $1. Perfect. Guess what? You're risking 15% of your account. Are you okay with that? Are you cool with that? Are you cool losing $300 on this one trade here? All right. You understand? If I say, you know what, I want to risk 15, and that's not, guys, the lot size here is 0.15. That's not 15 cents. That's not $15. All right. That's not $20. That's not 15 pennies. All right. The 10, for those who don't know, that's $1. Understanding lot size and understanding what they represent is everything, guys. If you don't know how to count, please go learn how to count. That's what baby pips are for. Go learn how to count. One of the biggest struggles with a lot of traders, you don't know how to count. So the 15 is $1.50, right? It represents $1.50. If I put 1.00, right, that doesn't represent $1. That represents $10 per pip. Okay, that one represents $10 per. So every pip that this thing moves, it's going to be $10. So if you go down just 3 pips, you're already down 30 bucks. You go up 3 pips, you're up 30 bucks. Make sense? Okay, guys, this is all part of the basics. And if you don't know your basics, like I said, there's a lot of programs out there. I recommend Baby Pips because it's exactly that, Baby Pips, right? It's for beginners. So anything that I trade, let's say I'm trading GU, right? GU had a beautiful sell opportunity. Perfect example. So again, like you just learned, I'm on this 10-minute time frame. Let's say I wanted to use my fib. I measure this leg that dropped right here. See this leg? Boom, boom. Notice when this came up, bullish, I'm comparing it. It's not higher. How do I know when to sell? All right, I'm at my 50, pretty much 618 again. I'm waiting for a close below one of these bullish candles. We are bullish right now. So that means I need to see a bearish candle close below this bullish momentum. That's right around here. Close below. I get in on the next candle. Stop loss above. Or you can put a little bit higher, extend. So if we wanted to use this as an example, right? If I get in, if I get in here and then my stop loss there, that's about 12 pips. Let's go back up. Let's say Great Britain, USD, perfect, $2,000. Swap it, let's say 3%, perfect. I'm risking no more than 12 pips, perfect. I want to risk no more than $1. Calculate, right? It's going to let you know how much you're risking. 60 bucks, right? 60 bucks based on 3% of your account, right? 3 times 2. Okay, this where math comes in. 3 times 2, I'm risking 3%. If you can't do percentage, swap it out. So money instead. How much money do you want to lose? Oh, you want to increase it? I want to risk 100 bucks. All right, no problem. 100 bucks. There you go. Use the calculator, guys. This is your friend. So I'm risking 100 bucks. I'm okay with. You say to yourself, I'm perfectly fine. And then it drops 100 pips, 176 pips. Right? So that's a good risk to reward. If I'm risking 100 pips, I mean, if I'm risking $100, sorry, not 100 pips, $100, right? It was about 12. And this floors, I can live with that. I followed my strategy. like I said, I use the fib tool plus in conjunction with the MACD. So now I understand, oh, every time this goes bullish or every time this goes bearish, if it's not creating a new high, new low, all I got to do is wait. So when this was going bullish, I see it's not creating that new high, right? And I can do this on any time frame, all right? So this pullback here did not show up on the 1 hour, but it showed up on, I'm pretty sure, the 30-minute. There you go, the 15-minute, and so on and so forth. It's not breaking that previous high. Just like right now, right before the market closed, this went bullish, right? I go find a POI zone, one right here, one up here. When price comes into this zone, again, I can bring out my Fibonacci tool, measure this leg. Right? Measure this leg. And then I'm waiting for a bearish close. This is my POI. So I let price come into this POI zone. And now, once it's there, I'm waiting for a bearish close. I got it right here. Stop loss above, outside. And then I'm looking for my sell-off. All right. And this is how I use the MACD indicator. All right. In conjunction with price action, with confluence, with the Fibonacci tool if you want to add it. All right. Ladies and gentlemen, please use a position calculator. It will save you so much time, so much headache, so much. This is your best friend. This is your best friend, guys. I promise you, I promise you, I promise you, I promise you, I promise you. Right? Whether you need to do it for the pip amount, right? So again, if I want to do $1 and I'm risking 12 pips, let it calculate it for you, right? Let it calculate it for you. It's going to tell you. It's literally going to tell you. So if I'm trading Great Britain USD, it tells me right here what I'm risking. It gives me the answers. It's going to tell you the lot size, the mini lot size, the micro lot size, the price, the pip value. It's going to give you the answers. All right? It's going to give you the answers. It's going to tell you how much you're risking, what you're putting up. It's going to do all that for you guys. It's all here. So whether it's for possession, whether it's for the pip amount, whatever it is you're trying to do. But understanding this is way more important than understanding the strategy. Risk management is everything. All right, real quick. Obviously, crypto pulling back. We're not shocked. I told you guys this on the last video, right? See, right here, we're on the daily. That means there's going to be a bearish wave on this MACD. So if I measure from this previous bearish low to this high, right, we could definitely see price coming back to around 80,000. I would not be shocked. I could say 86 to potentially 80,000. If it goes lower than that, goes back to the 618, I can see that 74, 76. All right. But we're still going to go up. We're still going to go bullish. Okay. That's why I stated, on the pullbacks, if you're invested in these cryptos, instead of riding the entire wave, cash out, cash out somewhere here, let it pull back, buy back in. You'll compound and make more money that way. But Bitcoin, I'm expecting a nice little pullback. I expect this to continue dropping before continuing up. All right. We're still in the bull run, but this is part of the game. You're going to get corrections. Right? Ripple from this low to this high. Price could stop at $1.90 and continue going up. I wouldn't be surprised if it goes lower to $1.60, $1.50 and continue going up. Honestly, me personally, I would love to see it come back to $1.55 and continue going up. I would be super ecstatic because I cashed out a good chunk at the top here. So I'm actually waiting for a correction. So the bigger the correction, the better, because then I can really go heavy and then boom. Cardano, pretty much same thing, right? Hit a high of $1.30. Now we're at 89 cents. I'm expecting this to come down to 78 cents. As low as 60 cents. Again, the lower the better, and then ride this baby back up to the top. All right. Just going over a few, all right? Going over a few. Solana pulling back as expected. Again, this is where the MACD, this is where the Fibonacci tool comes in handy. Measure the leg. Perfect. Probably come back to the 786, 886, so 160, $150. And then see how you're getting this bearish wave on the daily? So that's a good thing. Let it come, probably come inside this POI and then turn around. And then this is where you want to buy back in. All right. So I just wanted to cut this video real quick, guys. Happy holidays. I hope you guys are with your family, your loved ones. Hope you're getting ready for 2025. But that's pretty much the update on how I utilize the MACD indicator in conjunction with price action. And if you want to add extra confluence, you can factor in the Fibonacci tool. But I hope this video has been helpful, guys. Practice, backtest, use it. Let me know how you feel. As always, like, share, comment below. Show some love. Share this with a friend, to tell a friend, to tell a friend, to tell a friend. All right, guys. And again, if you want access to the community, the Telegram for the Wall Street is in the description box below. But if you want access inside, shoot me an email or hit me up on the side and I'll show you how to get plugged in. But all in all, have a blessed weekend, guys. Happy holidays. And I'll see you all on the next one.